Hello guys, I am Miracle from Matrix Trading Professionals. I will show you how to find direction with high and lows of the day. So it's a very simple way to determine what to do the next day using the daily time frame. Let's just see how it goes. Now, of course, last in one of our videos, I explained these candlesticks that the bullish candle opens downward and closes upward. Just check out that price, pay attention to it. Open at one, because that's a bullish candle. Open at 1.2528. It closed at 1.2595. The other 1.2528. This 1.2595. So you can see the closing is greater than the opening. Let's see 3 days ago, open at 1.272 and close at 1.263. So you can see that the closing is below the opening. That's why it's called bearish. So bullish is anything going up. When price goes up, it's called bullish. So once you hear bullish this, bullish that, it means it's talking about up. So if someone says, I want to go bullish, the person says, he's trying to say he wants to buy. If I say I want to go bearish, it means I want to sell. Then, of course, I want to go long on Euro card. Then I'm saying that I want to buy Euro card. I want to go short on Aussie dollar. It means I want to sell Australia dollar, United States dollar. That is AUD, USD. Okay, so this is GBP USD. Let's see how to take our position using the highs and lows of the day. So this is a very simple strategy. When the previous candle closes, now look at how it works. We consider two candles. For instance, today we wouldn't have been on a buy, because let me mark. Now for me to trade today, I need to look at yesterday, day before yesterday, and yesterday. So this is my candle, so day before yesterday and today. Now, in as much as this bullish candle didn't close above this, I'm not going to take a buy. I'd rather even look for a sell opportunity. Okay, in terms of entry. Now, this strategy will work best when the market is really, really trending. Of course, if you look at pounds dollar, you are going to find out that the market has been ranging. The market has been ranging since this price. So this is a ranging market. Of course, if you look at it carefully, it has created a head and shoulder pattern. So that's the left shoulder, that's the head, and that's the right shoulder. Why this is the neckline. Of course, this is kind of an inducement for me. Okay, the market trying to take out the buy side liquidity. So let's see what happens at the end of the day. So for me, let's don't go there. We are this is not a market review. So let me clear this out. Let me clear this. So for me to buy, I think let me show out this strategy in a market that played out very well. So look at, considering this as my first candle, second candle. This market closed below this one, so I'm going to sell on this particular day. Now this one closed below this one, so I'm going to sell on this particular day. Now this one also closed below this one, so I'm going to sell on this particular day. Now this did not really close. Yes, it closed below. In terms of closing prices, this closed below this. Let me use another color. Just pay attention and stay patient. This closed below this, but in terms of wick, remember this is the candlestick body. You have the upper shadow or the upper wick and the lower wick. So if this is a bearish candle, meaning it closed here, there can be another bearish candle that closed here. Maybe something like this. Now the closing did not go below this. Did not go below the low of this particular candle. So You might also decide to plan to sell this particular day, the next day, or to avoid it, just like what happened here. So if you like, you sell, and of course, it just don't do an instant execution. You look for a good entry to sell. All right. Now, this particular bullish candle and this one. Okay, I know what. Okay, this particular bullish candle did not close below this one. I know what I'll be doing. I'll be painting it. So this bullish candle didn't close below this. So on this day, we're not going to trade. I'm looking for a simple way to explain this. I'm looking for a simple way. Let me draw boxes. Let me draw boxes. It is red. Now, this is a bearish candle. And then we have something like this. If I see this, on this very day, I'm going to sell. So I'll look for entry. We are talking about direction. So on this day, I'm going to look for where to sell. So let's assume, of course, I sold and the market sold as well. And then, like, this is a very simple, it's a very simple concept. And then I have this. So seeing this, because I think, let me be numbering them that, wow, that will help. So this is 1, this is 2, this is 3. So candle 3 closed below candle 2. So for candle 4 on that 4th day, let me say the 4th day, I'm going to sell. So let's also say I sold, my market goes down. So candle 4 went down. On the 5th day, I'm going to sell also. So let's say I sold and the market went, okay, let's say the market did this. Now, because this did not go above the high of 4, I can also decide to sell. So this the 5th day. The 5th day did not go above 4. So the idea for each of the days, if it's bearish, mark the highs. Do you understand? Mark the highs. So if the next day does not take out the high for a sell, if it's a bearish market, then keep selling. Now, for a bullish market, this is the way it goes. For a bullish market, it's a very simple strategy that you just need the daily time frame. You can just use daily time frame for direction. As time goes on, we'll talk about entry. Okay. So the 1, the 2, the 3 we are going to sell. And let's say we sold and it sells. Sorry, we are going to buy because it closes above. Now the 3 closes above also. The 4 we are going to buy. And the 4 closes above. The 5 we are going to buy. The 5 closes above. The 6 we are going to buy. The 6 closes above. For instance, we're not going to have all this. All right. Now let's assume day 7 we have this. We are not going to buy again. Why? Because this took out the low. I think I'll type this so you understand the logic. Okay, because 1, 2, 3, 4, 5, 6, 7. So day 7 took out the low of day 6. So in as much as the low is taken out, we can't buy again. Okay, like in this case now, day 5 did not take out the high. So the strategy is this: as long as, like in this case, we're going to plan a sell, we would have planned a sell today because this candle did not remove this high. But why this strategy will not work? This is a sideways trend, so you need it in an upward trend. Okay, look at this. This candle and this candle. This closed above this. If we had bought, we would make money. Now this closed above this. If we had bought, of course, you are going to look for entry. You don't buy on top there. You look for entry. So I don't know where the entry, if you found the entry or if not. Now look at day 2. This particular day did not take out the low. So we still stay on buy. Just that's how it works. Okay, same way. Look at this. In as much as it closes above this one, we're going to look for entry to buy. Now, but as time goes on, we're going to start talking about entry. Like this strategy works easily on most pairs. Look at how the market grows. But in as much as price is not ranging, look at here. The market started ranging, so you stay away. So as far as price is not ranging, so what's this strategy? As simple as it is, let's write it. Now remember, it's direction. We are not talking about entry. It's all what direction. So for market direction, buy. If yesterday, buy today. If yesterday closed above the previous 2 days ago, closed above the previous day. Buy today if yesterday closed above the day before yesterday. Closed above the before yesterday. So today, if yesterday closed below the before yesterday. You see the rule? Now also buy. You can also buy if yesterday did not close below the low of the before yesterday. So just take your time to understand. You can also sell if yesterday did not close above the before yesterday. I hope you just understand it. So take your time to meditate on the rule and understand it. You can buy if yesterday did not close below. I gave the instance already. I gave the instance already. All right. Let's look for different pairs and just take a trade. So this just one time frame, daily time frame. Like you don't need 2 time frames to do this. Oh, am I opening this pair? Not gonna work, please. Okay, let's see USD. So what I'm going to do, let the chart load. So using the strategy, like using the idea, now we are not looking for entry, we're just going to take position. So we would have bought today. So the way today is going, we're going to buy tomorrow. So let me just place a buy limit so you understand what we are doing. Let's place a buy limit. Okay, there's a way to do that. Let me place a buy limit here. Let me place a buy limit on that price. Do you understand? Why am I buying? I'm going, of course, this market was so close. So now this helps you analyze the market in just 15 minutes. So within 15 minutes, less than 15 minutes, you have looked at different pairs and then place your entry. Okay, so I'm placing a buy limit here because I want to buy. Let's see, so USD card. Oh, okay. I don't like how it's closing today, so I'll leave it. Okay, now we said sell if today does not close. Sell if today does not close above. So now, okay, today is still on. So in terms of the rule now, this particular candle didn't close above this previous one. We're going to sell. So let's have a sell limit. It's very simple. Like you don't need to look at a lot of things. So this, of course, we'll talk about entry rules. Okay. So this is good. Okay. Now today, obviously, it's not going to close above the previous day. So we're going to sell. sell limit. I'll change the lot size to 0.01. Just use any lot size you want to use. You see? So I believe with what I'm doing now, you are kind of understanding the rule better. Now, today it's closing above the, so I can decide to buy. But then looking at the big picture, of course, it's a range market, so I can still stay away from it. Let's see EU. Delete. Now, I'll sell. It's closing below the open. The market open here. This is a bullish candle. It's open here. Let me show you. The market opened here. This is it open. This green candle open at 1.086. The red one is going to close somewhere around here, so below it. So I'm going to buy. Sorry, I'm going to sell. I'm going to sell. 0.0. Do you understand? I just hope you understand. Okay. Just like today, if we are sold, we'll make money because this particular candle didn't close above it. Like it's two rules. If it closes below the low, you sell. If it didn't close above the high, you also sell. Okay, let's see if we see one more buy, then we call it a day. I don't know. I've opened all these pairs. So that's just it. Try it out. Try it out. USD card. Did we? I think we'll pick the buy. Okay, because of how it's closing, but then because of how it's closing, let's assume it closes above this high. This is the previous day high. Let's assume it closes here. We are going to pick a buy on it. So that's it. The video is long already, and I believe you got value from it. So subscribe to the channel if this is your first time of coming across our video, and also share the video. Thank you very much, guys, and enjoy the rest of the day.